Hello and welcome to Money Matters. Hong Kong has become a listing hub for biotech companies in the last 3 years. Zella Chin reports on the development of the sector and warns investors about the risks of investing in pre-revenue biotech companies.
Researching DNA, testing new MRI scans, developing new drugs.
Biotech is a growing sector in Hong Kong. In the past 5 years, the number of biotech companies at Science Park grew from 30 to more than 150 now. They expect a surge in demand for healthcare products and services as China's population grows older.
So this is our product development center for MRI systems.
Simon Yeung started his business in Science Park in 2008 with $10 million. The company is developing MRI systems specialized in scanning the brain and the breasts.
For the breast MRI, it's specially designed for Asian women and for breast MRI screening for early detection of breast cancer. And then for brain, we would like to have early detection of dementia, Alzheimer, and also stroke.
And he's built a new MRI scanner for the market.
This machine is specially designed for newborn babies. It's very fast. The image quality is very good.
And how would clients or hospitals use it?
The response is really good, and the hospital, they usually use for imaging very sick babies, especially those with neurodegeneration diseases.
He's had 100 pre-sale orders and plans to deliver the machines by 2022. He estimates the global market potential for neonatal MRI systems is about $273 billion. He sells products to more than 15 countries. Revenues in 2020 doubled to more than $500 million, thanks to the growth of the China market.
In China, it used to be like we only have public hospital, right? But after 2016, the China healthcare reform actually changed that. It allows a private hospital to be open. They need a very value-added machine, so that's what we can provide.
Revenues are poured back into developing the business. The employees in Hong Kong design, research, and engineer the products, and the machines are made in China. Simon's raised about $800 million from venture capital and private equity funds so far. And now he's considering listing on the Hong Kong bourse to raise a minimum of $2.3 billion.
We need lots of cash flow to keep the business up and growing. For example, we need to expand our manufacturing facilities. We need to expand our R&D teams. We have lots of logistics to be done to export our MRI system globally.
More and more healthcare-related companies are interested in listing in the city since 2018, when Hong Kong exchanges allowed pre-revenue biotech companies to list. Since then, Hong Kong's had about 70 pre-revenue and money-making healthcare listings, raising more than $209 billion.
They have capacity to host about 36 companies.
Raymond Wong is the head of investments for the Hong Kong Science and Technology Parks. And he says it was a tipping point for the biotech industry to allow pre-revenue companies to list with the introduction of new rules called Chapter 18A.
Before, there was no other channel other than listing elsewhere, for example, in the States. Now there's a channel here in Hong Kong, and a lot of PRC companies are actually coming to Hong Kong for listing. This is very convenient to them because this is close to the market. For the past 3 years, there are a lot of more sophisticated investors who are investing in the stock exchange. That includes from the private equity, public equity funds, sovereign funds, hedge funds.
Hong Kong, not yet.
Sean Leung listed his pre-revenue drug company on the main board at the end of 2019. He developed an antibody called SMO3 to treat rheumatoid arthritis, a disease where the immune system attacks healthy cells in the body, causing inflammation of the joints.
What would your antibody do?
Actually, your immune cells supposedly should not recognize your own body and attack it. But when they get old, it attacks your joints. So our antibody will suppress those cells. So let's say that don't attack, it is your own body. That's what we are telling the immune system.
In a very natural way.
In a very natural way, yeah.
The drug is in a phase 3 clinical trial in China. Sean hopes to get regulatory approval and sell his first product in about 2 years. He estimates the global market potential for the antibody drug is about $235 billion a year, and about 5 million people suffer from rheumatoid arthritis in China. Sean had difficulties raising money 20 years ago.
When I first started my company, it was really difficult because like Biotech was not there in Hong Kong. So it would take me quite a bit of effort to convince investors to invest in a biotech startup.
Eventually, he raised about $175 million from investors and an additional $1.3 billion from listing on the Hong Kong market.
And then with that Chapter 18A, you can develop more than one product at the same time. So under our portfolio, we have about 3 to 4 different products, about 5 or 6 different clinical trials. Without that kind of money, we are not able to do as fast and as big.
The Hang Seng Hong Kong-listed Biotech Index was launched in late 2019. It includes 54 constituents with 21 pre-revenue biotech companies, generating an annualized return of 40%. The head of research for Kingston Securities says putting money in pre-revenue biotech shares is a high-risk, high-return investment.
Some even not profitable yet, but their share price outperformed the market significantly in the past 1 or 2 years. Although some biotechnology companies outperformed the overall bond market, some just dropped below their offer price just on its first debut.
For example, the share price for Sean's company, Sinomab, is 55% below the listing price. Dickey warns the average investor shouldn't put more than 10% of their money into pre-revenue biotech stocks.
Because this is a yes or no situation. If one company cannot develop one profitable vaccine or medicine in early stage or even in next 2 or 3 years, these companies may not be sustainable.
While pre-revenue biotech may not be suitable for the typical investor, Raymond is bullish on the sector's growth potential.
We are seeing the demand there. The China market is just growing. Second is that there's a sophistication that's being built on the Hong Kong Stock Exchange. Right now, it is the world's second largest biotech, I was saying, listing hub. And this is not easy to achieve within 3 years. And plus the fact that we are seeing the ecosystem being built around it, receiving a lot of attention from the regulators, from the government, and from the industry.
Container shipping rates between the U.S. and China have hit new highs, soaring above $20,000 per 40-foot container. The rates to Australia have reached a reported $10,000 per unit, while rates to Europe were $14,000. The increases have raised concern about global supply chains ahead of the peak U.S. retail shopping season. The outbreak of the Delta variant in several mainland cities, including the key port of Ningbo, could also increase shipping turnaround times to up to 8 days. A number of typhoons off the busy South China coast also hasn't helped. Analysts say the factors pushing rates higher haven't been seen in over 30 years. The spot price per unit on one of the busiest container lanes between China and the U.S. East Coast climbed 500% from a year ago. The surge in rates has also shifted shipping capacity to the routes with the higher rates and could cause more ship shortages on less profitable routes to other countries. The rate increases reflect the deep disruptions to the global economy and the movement of trade caused by the COVID-19 pandemic. Analysts say there won't be any major increase in the number of ships registered for the next 2 years. A U.S. judge struck down a California ballot measure that exempted Uber and other app-based ride-hailing and delivery services from a state law requiring drivers to be classified as employees, eligible for benefits and job protections. The judge called the measure unconstitutional. Voters had approved the measure in November after Uber, Lyft, and other services spent $200 million in its favor, the most expensive ballot measure in state history. The apps had also threatened to leave the state if voters rejected the measure. Uber said it planned to appeal.
Up next after the break, searching for the rare affordable apartment in Midlevels. Stay with us. Welcome back to Money Matters. Property prices in the luxury sector outperformed the mass market in the first half of this year. It's common for some homeowners in mid-levels to ask for hundreds of millions of dollars for a flat. In this episode of our tour of district property, reporter Alice Kahn went to Midlevels West to check out a more affordable apartment in the traditional high-end area. After visiting a property on May Road this week, we continued our property search in Midlevels West. We wandered up the stone steps of Pottinger Street to Lyndhurst Terrace, once the location of the earliest brothels in Hong Kong. In the old days, the street had a vibrant local scene. The central Midlevels escalator brings commuters up and down the steep urban landscape of modern Hong Kong. We rode the escalator up to Midlevels West. It's a swish area, but flat prices here are not as steep as the streets in other neighborhoods.
View is actually one of the crucial factors defining the housing price in the luxury residential areas. In Mid-level West area, the view is not as good as the Mid-level Central. Mid-level Central is in a higher altitude.
Currently, prices range from $21,000 to $25,000 per square foot, about the same level as large mass-market apartments in Yuen Long and Tuen Mun. We found a flat on Robinson Road, one of the major thoroughfares of Midlevels West. As early as the 1870s, Robinson Road had an enviable reputation, housing the European upper middle class of its time. The area remains one of the most affluent in Hong Kong. Many wealthy local families and expats who work in Central choose to live here. We checked out this 29-year-old high-rise called the Grand Panorama. It provides 558 units with sizes that range from 687 to over 1,900 square feet. The average transacted price in this project is nearly $22,400 per square foot. Flats here command a higher price on the upper floors and have an open view. As the market has improved, homeowners are asking for a 5% premium over the bank valuation. The flat we visited is 1,290 square feet. The owner is asking $41 million or $31,782 per square foot, higher than the average, but it is lower than properties in Midlevels Central.
This landlord has been put onto the market to test the price. If eventually she can sell it in her ideal price, maybe she'll change to other places or buy another properties for investment.
The flat is on a middle floor. It has a high efficiency and a practical layout.
And here is the dining area, and this is the living room, and totally it's 360 square feet.
Well, it's quite large.
Yeah.
And the view is very open.
Yeah, so you can see there are a lot of open building view, and you can also see some Victoria Harbour view, and IFC, ICC, and even some fireworks maybe.
And how about here? Because the view can really be blocked in future?
Well, I don't think so. It's because before this property is school, so it's not gonna have some changes later.
The window is also very large.
Yeah, it's quite give us the view that is spacious, and it's really hard to see some big window for this older building.
The ceiling is below 3 meters high, lower than other new buildings. The wall on one side of the living room is covered with mirrors that reflect light from the outside into the living space, making it look larger and brighter. At the back of the dining room area is the kitchen.
Well, this kitchen, it seems like larger than a bedroom.
Yeah, this is quite a large kitchen. As you see, you can see some working panel here, and it's well equipped with washing machine, a fridge, a ventilation fan. Actually, it's quite better than other flats. And also, as you can see at the back, there's a storeroom and an independent toilet.
The appliances are still in good condition, and it has plenty of cabinets and drawers for storage.
Jimmy, this apartment is nicely decorated.
Yes, actually the most expensive part is in the kitchen and the toilet. And you can see Lana also changed the bathtub into shower stand.
That make it very spacious.
Yeah, because people nowadays don't use bathtub already. So Alice, you can see this single bedroom. They've got some wardrobes here and single bed fit-in, and here's the cupboard. But the most special and the most beautiful one is the ceiling.
The bedroom is actually 130 square feet. It can fit a double bed, and it has an open view.
So here comes to the master bedroom, and the area is around 360 square feet. And you can see we can enjoy a very nice view and fit in a king-size bed with a large cupboard.
Even with a king-size bed, there's still room to walk around it on all 3 sides. The open view and large window gives the room a bright appearance. On the other side of the corridor is another smaller bedroom. The view isn't as open, so the room is darker and appears smaller than its actual size.
Then the owner is now asking 41 million. Is it market price?
It's actually not market price. It's actually marked like 15% up the bank valuation. But of course, you can see the condition of the interior is really good. Landlord has spent like around 800,000 for the renovation. If the buyer buys a flat like this nowadays, maybe they need to spend $1 million or 1.5 million to do the renovation, which means if they buy this flat, they can save some money.
Then are there any offer?
Well, there are actually quite a lot of people come to view, but no offers yet. So as you can see, the price is really high up. So I think landlords has to wait a little bit more for the future market. Maybe the price will go up later.
Amenities-wise, the project has a swimming pool and other facilities. There's also a supermarket nearby. Having the escalator close by means access to Soho is quick and easy. Central is 15 minutes away, and transport to other parts of the city is not direct. The outlook for price appreciation is not that promising.
There are quite a lot of old buildings, maybe 30 years old, 40 years old, and they are going to be renovated soon so that people are not going to pay more or pay over like 10% over the market price for the properties here.
New land supply anywhere in mid-levels or central will be few and far between. New developments will have to come from compulsory sales and redeveloped, a time-consuming process. The 66 units in this redeveloped project will provide just 137,000 square feet once it is completed. Surveyor Kit Chung says it will not dramatically push prices up.
The new development project will stimulate the movement of the housing price to go further upward. But actually, because the supply, which is not big, so we can see that the impact will not be very significant.
Jerome Powell, this story is for you. The Federal Reserve Chair, always on the lookout for signs of inflation, might want to drop by Manhattan's Upper East Side, where a $200 plate of French fries stretches the definition of haute cuisine. The restaurant Serendipity 3 already claims Guinness World Records for the most expensive burger at $295 and ice cream sundae at $1,000. So if the question is, you want fries with that? The answer requires credit approval. As of July 13th, the fries are officially the most expensive on Earth. Why?
Truffle, truffle, and truffle inside these fries. So, in other words, we have truffle oil, we have the fresh black summer truffles. The Mornay sauce, in other words, it's a cheese sauce, is meant to be a dipping sauce, which is infused with truffles in 1,000 different ways too. So, truffle is the main star here.
The creme de la creme pommes frites start out as chipperbeck potatoes. They are blanched in vinegar and champagne. Then they are fried twice in pure goose fat, so they're crispy on the outside and fluffy on the inside. The customers, we're sure, will think the price is worth it. No matter how hard Chinese officials have worked to keep the world's most famous wayward gang of elephants away from people, there have been close encounters. If you recall, the herd has been on its road trip since last March and have marched through several provincial towns on its way to no one knows for sure. Amateur footage captured recently shows a naughty elephant ripping a rear-view mirror from a car like a chew toy. It's like a game for the pachyderm. For the driver, an embarrassed call to an incredulous insurer. An elephant did what? Officials hope to keep these sorts of contacts to a minimum as the herd have turned tail and are now on the road back home. Again, no one really knows why.
That's the show. Thanks for watching. Next week on Money Matters, how companies are renovating their offices to create new hybrid spaces for people to collaborate while having the option to work from home. See you then. Good night.